Fear, uncertainty, and doubt.
Fear, uncertainty, and doubt.
Fear, uncertainty, and doubt.
FUD is fear, uncertainty, and doubt.
Fear, uncertainty, and doubt.
FUD, F-U-D, stands for fear, uncertainty, and doubt. Now, that's not just for Bitcoin. FUD applies to gold or minerals, it applies to stocks, but there are people who are groups who want to get the price down on Bitcoin. I mean, their goal is to buy more of it, but they don't want to pay the price right now.
And it is often intentional, published by opposition to Bitcoin about basically untruths about how Bitcoin operates, about Bitcoin's effect on the world. And then, of course, it can also come from just misunderstandings or not understanding about how Bitcoin works. And that kind of FUD is just as harmful. It's just not intentional or maybe malicious, but it's still just as harmful to the public's understanding of Bitcoin.
It's more like propaganda, right? And if you look at sort of like the classical definition of propaganda, it's a way to influence people to a certain action. Or in this case, it would be sort of like inaction or thinking that it's something that not worth doing. Generally, it's the action that people want you to take after giving FUD is, go do something else to mitigate that FUD, or to sell some asset or do something like that.
For the most part, people create FUD. They create fear, they create uncertainty, and they create doubt in an attempt to have you sell your Bitcoin because you're scared. As more and more people sell their Bitcoin, the price drops, and they're able to come right behind you and scoop up your Bitcoin at a lower price. That, in a nutshell, is what FUD is.
Oh man, Bitcoin is such a loaded question because Bitcoin is everything, right?
Bitcoin is a unconfiscatable, decentralized store of value.
Bitcoin is better money that will help us build a brighter future.
Bitcoin is digital gold. So it's digital in the sense that it is, very quick to transfer over space.
People ask me all the time, do you have a Bitcoin with you that you can show me? And there is no Bitcoin you can show anyone. That's like saying, let me see your mailbox. I can't show that to you, and I can't show Bitcoin to you.
Bitcoin is a distributed ledger technology that allows for the transference of value peer-to-peer across the network. It is decentralized and distributed across the globe and allows people to participate freely themselves.
Bitcoin is the first time that civilization's ever been able to create something, specifically like a money type of thing that you could actually trust.
It has a perfect scarcity of 21 million, meaning that you can, it's going to hold value much better than something that is expanding quickly, kind of like the US dollar or lots of other assets. Pretty much anything else, if there's a large demand for it, more of it will be produced. So if we started using aluminum as cash today, people would just produce a lot more aluminum, and that would drag down the price. The stock of it would increase. But Bitcoin's not like that.
Our money throughout history has time and time again been co-opted by individuals or a small group of individuals at the detriment of the society that they're governing or ruling. And the same thing has happened with the dollar. It has been basically taken control of by the Federal Reserve Bank, which is a small group of individuals that make decisions about how the global reserve currency works, and most importantly, about its monetary supply.
It's digital gold. It's perfectly scarce, it's decentralized, and it is digital. So giving it sort of like the best of all worlds. It's like fiat money in the sense that it's very convenient to transfer across space. It's like gold in that it has scarcity and no permission required, meaning that it has saleability across time. So it's digital gold.
Gold was probably the first hard money we've had. And when I say hard, it means hard to replicate, hard to create more of. But Bitcoin is hard money because like I said, it's provably limited. So it's a whole different idea of what money is, and most people don't even understand money.
We can build a better future using a money that is less corruptible, I guess. And money being the foundation, or one of the most important foundations of civilization, Bitcoin is a beacon of hope. A lot of people think that Bitcoin started with the launch of the network in January 2009, but really its origins lie, decades before that, with a group of computer scientists, cryptographers called the cypherpunks.
It really started with the cypherpunks, and you can go read the Cypherpunk Manifesto. And this was an email list back in like 1992. A lot of people that you might have heard of were on that list, including people like Julian Assange, Adam Back, Zuko Wilcox, Mark Andreessen. These were all part of that original cypherpunk mailing list. And one of the things that came out of it is the Cypherpunk Manifesto. And it was sort of like a clarification of the values that this group held. And among them were privacy, the ability to transact with each other. And in the Cypherpunk Manifesto paper is this clear call for some sort of electronic money.
They recognized that cryptography could be used to create a money built on the internet that could be peer-to-peer, it could be more private, and it could be less prone to capture by a small number of people. And the attempts had been made many times over the decades, but there was one problem that persisted.
They all had the same flaw, though. They all were centralized. There was a single point of failure. There was a place that somebody can go and regulate. There was a way in which the government could, interfere with it just by going to one organization and doing it.
All of those attempts had failed because they did not solve a computational problem, a computer science problem called the Byzantine generals problem. And essentially, this is a problem of collaboration, or a way to achieve consensus across a network without a central point of failure. And this problem was solved by Satoshi in Bitcoin using a couple of inventions that were created by Adam Back and others, called proof of work, and then combined with a peer-to-peer networking system that was created, made most popular by, let's say, BitTorrent and Bram Cohen.
And it really wasn't until 2008 when Satoshi Nakamoto dropped the Bitcoin white paper to the same email list and said, hey, you know what? Here's a system that I think, corrects the flaw of all these other things.
The genesis of it really comes on October 31st, 2008, on a cryptography website where Satoshi Nakamoto published a white paper describing the Bitcoin Core protocol and the idea behind it. It then evolved and sort of became an open source project, and it is what we have today.
It was created by someone named Satoshi Nakamoto. Now, nobody knows who Satoshi Nakamoto really is in real life. That was a pseudonym he used as his name.
He's pseudonymous. We don't really know, or anonymous actually. We don't actually know who he is. All we have is the proof of his work. He built Bitcoin on the back of a lot of other projects which were kind of similar, which wanted to be what Bitcoin eventually became, but they weren't decentralized enough, which ended up being the key and one of the problems he was able to solve.
But yeah, we don't really know. The more important thing there is that it doesn't really matter who Satoshi is. The thing is, the system already exists. It is decentralized, and the person of Satoshi, while we should be grateful for the contribution, doesn't have any particular influence over everything. And the ethic of Bitcoin and the culture of Bitcoin has evolved to the point where it really does put a very strong emphasis on the decentralization and keeping the rules as they are. And Satoshi's not going to change that.
But it was created by him, has gone out into the wild world of the internet, and to this day, it's still going and growing and gaining more use and more value every year. Now, Satoshi Nakamoto owns the first million Bitcoin of the 21 million Bitcoin that's been created.
But if we assume for a second that the million coins belonging to Satoshi do one day move and they are spent in terms of the Bitcoin transactions, and that just means there's more coins on the market, which will have a momentary decline in the price. But the notion that that presents an existential threat, that somehow this will undermine the network, is just not the case. When you look at the world and you look at billions of people on the planet, and then you think about, okay, active circulation of Bitcoin, by some estimates, there's 2 to 3 million on all the exchanges. So I think I read a statistic, it's about 50 million millionaires in the world. So if half of those millionaires woke up tomorrow and said, I want to buy a Bitcoin, it's not possible. There's not enough Bitcoin in circulation. The price would, it wouldn't just be high, it'd be like insurmountable. You'd have to pay, over $1 million, $2 million, $3 million, whatever it is, a Bitcoin, because no one would part with them if the demand were that high. So even his million coins, if they entered the market, I bet they'd be gobbled up in a year or so, minimum.
I don't think it's likely. I think they haven't been sold in 12 years. Satoshi has, I don't know, $100 billion, $50 billion, something like that worth of Bitcoin. And obviously the temptation to sell some of that would be great. I think that the keys to those coins have been burned, meaning they're gone forever. They've been intentionally destroyed. And Satoshi understands the importance of not moving those coins, and probably, if still alive, has other coins that were amassed, through the intervening years, as mining became more popular and more decentralized. Could have easily been continuing to mine at that point. So if Satoshi is around, I'm sure they have plenty of Bitcoin.
I think there's degrees of centralization and degrees of decentralization. So you have to look at it as a spectrum. Okay, there's no such thing where you're just going to hit this is decentralized or this is centralized.
Having something decentralized means it's prone to capture by a small number of people. A government could come in and say, shut down those servers, AWS. We're making a law or a policy that's instituted by the SEC or something like that. Shut down those servers, or we're gonna, fine you or punish you in some way or another.
With a centralized system, you typically have servers. Let's just say Google. Now, Google's a good example because it's a big company and it has lots of computers. So in some ways, it physically seems decentralized. They have computers all around the world that they own, but it has a centralized governance. So the CEO of Google or the chief engineer, whoever, I don't know how their hierarchy works, but the big shots at Google have the authority and the ability to completely control any of those computers and turn them off, or a government can order them to do that.
Centralized is what you have now with the U.S. banking system, or the world banking system, I guess, as far as that goes. You have banks that control your money. You put them in there, they control them. They send them out for you. If they don't want to give you your money, you can't get it back. I mean, basically, that's hard to believe, but it happens in other countries. In Greece, for instance, they took a part of everybody's money, just took it out of the bank accounts because they needed more money. Country was going bankrupt. They just took it out of everybody's wallet, everybody's bank account.
With Bitcoin, there is no center. There is no central party.
Ideally, everybody around the world, individual people, are running the software. There is no central server. Nobody is in charge. And through all of the individuals that are running the software, that becomes a network. And without somehow stopping every single one of them, you cannot stop it.
There's no main office. There's no president of Bitcoin. There's no boss. There's nowhere for the government to go and say, give us all those Bitcoins. There just isn't.
They make it the Bitcoin network where almost anybody with relatively minimal computing power can run a full node, which is a full copy of the blockchain. They can validate all their transactions. They can actually verify that the Bitcoin they hold is theirs.
So right now we have about 12,000 publicly visible nodes that are all verifying the network independently all over the world. And there's guesses that there's about 100,000 nodes in total, the rest of those being not visible to the network. They're either operating on Tor or they're not broadcasting their IP to the network. And so there's, maybe 100,000 Bitcoin nodes out there verifying the network. And again, those nodes, those computers that are verifying the transactions on the network can be run on very cheap hardware with low bandwidth. And that's important to kind of push Bitcoin far up that decentralization spectrum compared to everything else.
Bitcoin's the only coin, in my view, that matters, mostly because of the fact of how it came about. There was no pre-mine, it was an open source project. Anybody could have joined the network, anybody could have gone up and submitted an improvement to the protocol. And the way it came about, it had sort of this immaculate conception where to recreate that, you'd have to recreate the unique conditions of that moment. And I don't think it's really possible.
Like many networks, on computer networks that are born on the internet, social networks, for instance, they gain a certain momentum, a certain share of the network. And one of the main, I guess, pillars of Bitcoin maximalism is that network effects or network protocols tend toward one. And meaning, you know, you have TCP/IP, which runs the internet, essentially, and then you have other protocols built on top of it. Once there's sort of this mass consensus about, or this mass usage, I guess, of those protocols, no one wants to go and use another protocol system because this is where everyone is.
The other reason I think it's kind of a unique asset that is not going to be matched is because, unlike a piece of software, a protocol typically has a very long lifespan. If it is the dominant protocol, as evidenced by the network effect and people joining into the network, it can continue to improve. So if there's another coin that emerges or some other protocol that has characteristics or qualities that you'd want in Bitcoin, Bitcoin over its course in history has actually implemented it into the protocol. It's actually added things to it. For example, things like segregated witness. Recently this year, we're putting in Taproot. These things actually improve the Bitcoin core protocol, and think of it as like an upgrade.
Because of the technology and the idea that the Byzantine general problem has been solved, it also means that you're not going to have double spins of this digital asset, because digital assets are easy to copy, right? So if they're easy to copy, then that means you need to have a technology and an invention, which is the proof of work that is in Bitcoin.
It is the only coin that has an incorruptible monetary supply. And it's the only coin that has the sufficient decentralization to maintain that incorruptible money supply. Every other altcoin is centralized, essentially.
And that's the big difference, is that you either have a controller or you don't. You're either self-sovereign over your money or you don't. Our current monetary system is a cesspool of theft, cronyism and corruption. And I talk about this a lot in my book, Thank God for Bitcoin. But basically, it's a system that steals from everybody. And this is part of how central banking works. Essentially, it was originally created like back in the 1600s, back in England, the whole central bank monetary system, as a way for the government to spend money it didn't have.
Bitcoin is better than our current monetary system because Bitcoin, unlike the US dollar, can't be increased. You can't make any more Bitcoin than 21 million. Now with the US dollar, I don't think there's anyone on this planet who doesn't realize we're printing that as fast as we can. And actually, it's not even being printed. They're just adding numbers to a computer.
And Bitcoin is better than our current monetary system because it's incorruptible. The monetary supply cannot be changed. And because that is the case, we can rely as economic actors on a consistent monetary supply essentially forever. So we can make economic decisions with confidence that the value of Bitcoin will either be roughly the same or even more than it is right now.
Our economy, as I mentioned, is built on driving compensation. So what we see happening right now in our economic system is that the Federal Reserve and other central banks across the world, they have to print. They have to print to keep consumption levels high. And if you want to look at an example of this, look at what happened after the COVID crash. You saw unprecedented money printing. The wheels just came off in terms of 20% of the circulation of the US dollars were printed last year. That's a statistic that's regularly cited. And it shows that The only way they can keep the ship afloat is nonstop money printing, and they're facing these strong headwinds of deflation. So you have sort of a new paradigm where technology is making things cheaper and faster and more productive, but you've got money printing that sort of is trying to keep the old paradigm afloat.
With Bitcoin, you know what the rules are, and that's what it comes down to. You know the game that you're playing. In the current system, it could change every 4 years. Who knows what the rules will be? Who knows if your savings will be worth anything? Why should I work my ass off to put money into a system that not only do I not have any control over and, debatably almost probably no influence over, but it doesn't really have my interests in mind anyway.
Some of the poorest and most vulnerable people in the world are being stolen from every time the money expands, and it is expanding very quickly. In the US, the M2 money supply, which is one measure of all the money that exists, at the beginning of the coronavirus crisis, March or February of 2020 was somewhere around 15.5 trillion. And about 18 months later, it's about 20 trillion. So it's expanded by 30%. And historically, it's gone up by about 7%. So we have statistics going way back to 1959. It was around 289 billion back in 1959. It's about 20 trillion now. If you annualize that, that ends up being about 7%. So it's expanded in wartime, peacetime, crisis, or whatever, at about 7% all through its life. So that's how much you have to outrun, and that's how much value is being stolen from each dollar holder every year, about 7%, and much more so in, say, the last 18 months. So it's a crazy kind of statistic that a lot of people don't really get or understand or have any clue about. But really, all of this money is being stolen from the most poorest and most vulnerable people in the world on a continuous basis.
And rather than try to keep the old paradigm afloat and fight against these headwinds of technology, in my view, the stronger approach is to adopt a deflationary currency, deflationary money, which is what Bitcoin is, that embraces the technological growth and technological deflationary forces. I think in that economic system, you'd see productivity rewarded, you'd see positive social behavior rewarded, you'd encourage saving rather than reckless spending. Right now, as most consumers know, they are tempted nonstop with every gimmick in the world to get them to part ways and spend their money. And in many ways, it's actually smart to spend your money, because if you have fiat dollars, if you have cash, it is eroding day by day. It's becoming worth less. And anybody who's going to the grocery store now knows, buy groceries one month, the next month the groceries are actually more expensive. So it's encouraging you to part ways with your dollars. It's encouraging you to spend. It's also encouraging you to take out a tremendous amount of debt.
Bitcoin skips all of that. Bitcoin itself allows you, it's a cliche that we hear out there, be your own bank, but it actually is meaningful. It really is what it says. You are your own bank, you are your own banking system, you are your own Visa and your own MasterCard. You are the entire thing. And nobody can get between you and the other guy who you want to do business with when you're using Bitcoin.
So as economic actors, we can be confident in making decisions about businesses and purchases, et cetera, economic decisions, that this supply will be consistent over time. So we can project into the future if we're, building a business and thinking 20 years ahead, or building some large structure, a cathedral, for instance, right? That would take 40, 50 years to build. We can be confident that one Bitcoin will equal one Bitcoin 40 or 50 years from now, which allows us to make these long-term decisions. That's why Bitcoiners always talk about long-term thinking. And that fundamental change in being able to rely on the monetary supply and being able to think long-term versus thinking quarter to quarter, or trying to get rid of my dollars now because I know they're going to be worth less in a couple of years, and making these short-term decisions, you build a fundamentally stronger, maybe even some argue morally more sound economy and society.
I think that in the long run, we will have a better society that has more pro-social behavior if you fix the money. There's the old adage, money is the root of all evil, and if you fix the money, you fix everything.
Bitcoin fixes the money, and our money is broken. And that means a lot. It has such massive downstream ramification.
So when you get into Bitcoin, it'll fix your finances, because the thing is that when you start to accumulate Bitcoin and understand it for what it is, you'll probably not spend as much money on frivolous things that don't really add value.
In the Bitcoin community, you'll often see people talk about, there's a meme, Bitcoin fixes this. And the idea is that Bitcoin fixes everything, right? And that's, I hesitate to drop, such like hyperbole, right? Because, or absolutes. But I do agree that there are massive downstream effects for society and for individuals, and therefore for the world as a whole, for humanity as a whole, if we can fix the money. I think it's a basic pillar of civilization. It's been that way from the beginning. It's, solved the problem of barter, which is I've got to have something you want at the same time you have something I want in order for that to work. So money is what really binds us all together in an economic sense, and in a social sense, really, too.
And so that's how it begins to fix things. It begins to fix your mentality. It also puts you into a position of low time preference, which means it creates more patience in you because you're willing to wait. You're not willing to have to get it right now. It actually increases your delayed gratification. So some of these virtues that we have in the world that people look up to, like patience and those kind of things, it's like Bitcoin actually fixes that when you finally understand it.
Any parent can tell you, what's better for a kid's character is making them save and then get their toy later instead of get their toy now and then you have to pay me back. Like that doesn't improve character at all. In fact, that usually engenders bitterness and resentment, which obviously anyone with a lot of student loans for a useless degree knows very, very well. So it fixes society because ultimately, when you do have more saving and low time preference behavior, what you get are people that are creating, goods and services so that they can save, or so that they can make more money and so on. And that builds up civilization. Consuming things now, that breaks down civilization.
I like the idea that this is kind of the birth of a new asset class, the birth of the foundation of a new economy. We're not there yet, but you have to have the mindset of someone in the 90s thinking what the internet would be in 2021. I'm in 2021, I'm thinking of what the global economy will look like in 2035, and I think Bitcoin's at its core.
Yeah, I think that's ultimately what Bitcoin fixes. It gets us back on the right track.
I think that it depends on the approach taken by policymakers. I think there's an amazing potential for Bitcoin to be integrated fully into the economy and monetary system in a very peaceful and positive way. The question is there going to be people with vested interests who don't want to make that transition, who will fight every step of the way, not in a violent way, but just through policies that make it more difficult to transact in Bitcoin and difficult to store Bitcoin and make it more cumbersome. I personally don't think that's going to happen. My view is that I think people will turn to Bitcoin organically as the population understands the problems with fiat money that we're experiencing in the world. And I think that ultimately Bitcoin has the potential to remake our monetary system for the better.
I almost feel like the US dollar is doomed whether Bitcoin is around or not. I don't think Bitcoin will kill the US dollar. I think the US dollar is killing itself fine whether Bitcoin is here or not. Bitcoin is both a peer-to-peer currency and it's a store of value. The reason that we're not seeing it used as much as a currency right now, though, is because of the fact is how fast it's rising in value.
The vast majority, I think, of individuals using Bitcoin and part of the Bitcoin network are using it as a store of value. There are, early days, there were many people that were using it much more often for peer-to-peer transactions. And I think we returned to that after a while. But in my view, in the history of an asset like this, Bitcoin needs to first establish itself as a very reliable, very trusted store of value with wide adoption.
So the idea is that price and value are two different things, right? I think people don't get it all the time, but I truthfully believe they don't, when I say it, they don't get it, but they get it in practice. Because if they go to the store, they easily will say, this is too expensive, or man, that's cheap, let me buy more, right? Which basically lets you know that if you can use the word expensive or cheap, that means the value of whatever it is you're purchasing is not equivalent to the actual price. And there are some times when the value is exactly equal to the price, and that's when you buy it.
I have a friend who bought a pair of sunglasses, 8 years ago. Now those sunglasses are worth $60,000 in Bitcoin if you take the amount of Bitcoin he paid for those sunglasses. So do you want to spend $100 of Bitcoin today when in 10 years it could be worth $100,000? Or do you want to spend your fiat money, which 10 years from now will be worth half? So it is both. It's just people do not want to spend their Bitcoin right now as a currency.
With Bitcoin, it's much easier, and it's a much more superior store of value asset, and it has a major advantage over other players in the market. So it's for that reason that I think a lot of people use it as a store of value, because there really aren't that many alternatives.
Bitcoin is a great store of value because there are 21 million. That's all there'll ever be, is 21 million. As I said earlier, there's 21 million Bitcoin. Actually, with gold, most people use gold for a store of value. But how much gold is there? Nobody knows. Nobody has an idea how much gold is there. How much gold is there left in the world? Nobody knows. I mean, we haven't even started mining the bottom of the ocean yet, and 75% of this planet is water. Now they're saying asteroids will be coming by that have gold in them. So Bitcoin is a better store of value than gold because we know how many there will be now and 1,000 years from now. 21 million.
You also want to see in a store of value the ability, I think, to make it divisible. You know, every Bitcoin's divisible to the millionth. And you think of it like, okay, gold, there's only a finite amount of gold in the world. We don't know how much, but there is a finite amount. Bitcoin, we know there is going to be only 21 million because it's in the code. But if I have a gold bar in my hand, obviously that's a bearer asset. I have the gold bar. But if I want to chip off a little bit of the gold, that becomes very cumbersome. Having to do that, have to like divide it and make sure you're only segmenting a certain amount. With the Bitcoin, I can give you 0.000001 Satoshi, exactly, finite amount I could send to you. You can't really do that with gold. That's just too clunky. I also think the fact that it's unconfiscatable makes it the apex predator, as Michael Saylor would say, of a store of value. And what I mean by that is all assets in existence, whether it's gold, whether it's real estate, whether it's stocks, bonds, collectibles, they can be confiscated. You can walk into somebody's house and if they have gold buried in their basement, I can go take it. If you secure your Bitcoin and you hold your own private keys, which is how the network's designed to be used, no one can take your Bitcoin. It's not possible for them to confiscate your Bitcoin. They can take your person, they could actually put you in jail, but they, of course, cannot force you to transfer over the Bitcoin. As long as you safeguarded your private key, it is unconfiscatable. And that's really a game changer. That's different from any asset that we've seen in human history. There's really been nothing like it.
Bitcoin is currently already being scaled out for use around the world as a currency. As I said, the problem is not a lot of people want to spend their Bitcoin right now.
I think it's going to take a long time to do that. And when I say a long time, I mean half a decade before it gets there. I think you need to get people comfortable with how the network operates. I think you need to establish it as a store of value first, a recognized store of value, and you think the price needs to get much higher. You need to be well north of a $10 trillion market. Right now, we're still not at $1 trillion. Once it gets up to those levels, I think there's going to be enough support in the network and enough development by companies and entrepreneurs that are trying to fund development on layer 2 and layer 3 solutions for it to scale.
So the big one that everyone knows about is Lightning Network, and that's what's used in El Zante in El Salvador. You can use Lightning to go buy fruit from a fruit stand guy or get surfing lessons or something like that. There's all sorts of ways in which that can work. But that's not the only layer 2 that needs to exist. There are perfectly fine like second layers that can be run by companies, and it will be centralized, obviously, but there's motivation for a lot of these companies to provide that.
The only analogy I can think of is like the internet, right? In 1995, the internet existed. There were chat rooms. People would go online, and they'd be able to send emails to one another. Basic functions of the internet. But in 1995, there was no way you could stream live video every night. There's no way you could watch Netflix on the internet every single night and have high definition video. Bitcoin is kind of how I see like that now. We have an early phase where there's early adopters, innovators, people in the space that are trying to drive adoption generally, getting people to buy into the network. And once you get sort of a peak threshold where you sort of cross a chasm into broader adoption, then you're going to have a lot more institutional money, a lot more developers, a lot more brain power on the network that can help it scale.
Bitcoin mining is pretty simple. It's really just using computers to confirm transactions on the blockchain.
And it's important to point out that this is done according to a very strict set of rules that has been laid out since the very beginning. This doesn't change, and nobody's in charge of this process.
And blocks are just come around every about 10 minutes. They're added to the chain. That's why we have a thing called the blockchain. And it basically earns the right to create that block of transactions. So it's a competition between all of these computers that are running, basically solving a hashing algorithm. If they happen on the magic number that solves this hashing algorithm first, they win the right to add the block.
Bitcoin miners are essentially securing the chain. Nodes are the real backbone of the network, and I think of miners as kind of slaves to the nodes. The nodes are distributing transactions, validating transactions, and miners are supporting that validation.
Now, why would they be incentivized to do this? They get a block reward, and this is how new Bitcoin is added into the system. And every 4 years, the number of Bitcoin that the miners win in each block is cut in half. And so we're at about 18.5 million Bitcoin that's been issued so far, and 6.25 Bitcoin per block are happening now. That cuts in half every 4 years, moving on into the future when in about 2140, the last little bit of Bitcoin will be released into the system.
Until it's zero. And at that point, there'll be exactly, or actually not actually exactly, it's a tiny bit less than 21 million Bitcoin ever made. And it can never make more than that because this amount is known. We all have agreed on these rules. And I say all of us collectively, the entire network, these are the rules of the network that nobody can change. There'll only ever be 21 million. Once all the coins have been mined, there are a lot of kind of hypothetical, none of us can read the future, of course. But whatever's going to happen isn't actually going to happen when all the coins are mined, probably. We're going to get to a point in the next 30 years or so, maybe 40 years, where pretty much all the coins are mined. Well, we're talking, you'll only be receiving a tiny fraction of a Bitcoin every 10 minutes. So you might as well say that all the coins are mined at that point, but maybe not. I mean, maybe the Bitcoin are so valuable by that point, millions of dollars each, that tiny portion becomes a very meaningful amount even then.
When all the coins are theoretically mined, I think the network's going to look a little bit different. I think it's going to have the same core elements. I think it's going to have the same supply. But I do think that the vast majority of transactions are going to be driven by layer 2, 3, maybe even 4 solutions.
Transactions will be batched into single transactions. That'll happen on the blockchain. And second and third layer networks will have hundreds, thousands, millions maybe of transactions that happen back and forth on this second network. And when they want to settle, companies, bigger companies or banks or something like that, nations, we're ready to settle all of these transactions. They'll, run that on the blockchain, and it'll be finally settled. So it's akin to the way that, the economy works now. The payments are a separate layer than the final settlement. Interbank settlement can take a very long time in the current system, and it's extremely expensive. So as Bitcoin's, usage grows, it'll still be way more efficient to have final settlements and democratized for that matter, because anyone can still do it, even though it might be expensive, then this current system is at all far more efficient. So I'm not worried. I want the fees to go up. We want a fee market to develop so that we can transition safely away from this block subsidy or block reward that miners are getting, this essentially free Bitcoin awarded to them to issue into the network. And I have every confidence in the world that that will happen, and we're seeing it happen. And it's not going to be a problem. Bitcoin security will be fine on a fee-based incentive model.
Bitcoin does take a decent amount of energy. No one can deny that. The question, I think, is it an appropriate level of energy? And I think to understand Bitcoin's role in the energy space, what you need to do is you need to understand energy and how energy works generally.
So Bitcoin mining uses electricity. And there is a narrative out there that it uses way too much electricity. It's going to boil the oceans. There was a Newsweek headline several years ago that said by 2020, Bitcoin network will use all the electricity in the world because of the trajectory that it's on. This is nonsense.
You've got to realize miners who are mining Bitcoin, first of all, they want to make as much as they can. They're using as inexpensive of energy as they can, which means they're using renewables, water, solar, whatever they can get. They're trying to get the best price to make the biggest profit they can.
We have miners who voluntarily publish their energy usage, and the mining network is mining. The miners are in this extremely fierce competition for one thing, because there's two inputs into their business, right? One is your capital, your cost for infrastructure and for the computers, etc. The other one is cost for the energy. And the cost for the computers and the infrastructure are relatively the same. There's not a lot to be gained over your competitors in that market, right? In that way. Where you gain and where you profit is finding the lowest cost energy. So that means moving out to the edges of the energy grid, finding stranded energy that's otherwise not being used because there's too much being produced. Maybe at peak times, you build your energy grid infrastructure for peak usage. So in the summer, on the hottest day in Texas, you've got AC for everybody, for instance. Same thing in winter where you need heating. And so you overbuild that infrastructure, and there's a lot of wasted and stranded energy on the grid.
And this is where the real part of it not being expensive comes in. If we switch over this economy someday to more of a Bitcoin cryptocurrency economy, think of the money that's saved by banks hauling around money in big armored cars, all the people that have to drive to work at the bank, all the people who work at the bank and build the building and electricity used in the bank. More energy by far is used in the banking system than will ever be used in the Bitcoin system. So every time Bitcoin makes a headway into the banking world, less electricity has been used by the banking world, and Bitcoin is not replacing electricity or energy at the rate it was being used by the banking system.
The biggest reason why anybody has ever complained about Bitcoin's energy use is just because they don't value it. They value their clothes dryer, so they don't complain about it. They don't understand or value Bitcoin, so they do. It wouldn't matter if you got Bitcoin down to $10,000 a year of energy cost. It's going to be people that say it's $10,000 you're wasting a year on Bitcoin mining because they just don't understand or value Bitcoin.
Yeah, China just banned cryptocurrency. This may be the third time they've done it since it was created. And mining machines started moving out of town, and tons of fear, uncertainty, and doubt was created by the people who want you selling your Bitcoin. But until they banned Bitcoin, the fear, uncertainty, and doubt, or the FUD that was going out was that Bitcoin controlled too much of the mining power. And it was bad for the world because Bitcoin was being controlled by China. So now all the Bitcoin miners move out of China, and it's bad still. But actually, it's fantastic. It's fantastic in two ways. Number one, it shows that a country banned Bitcoin, and within weeks, miners were moving all their Bitcoin miners to other countries. That's how portable it is, showing no one country can shut down Bitcoin. Bitcoin is going to continue. So how quickly it was shut down, but it moved to other countries. The great thing, number two, is many of those mining companies move their mining machines to the United States.
Bitcoin obviously doesn't care about borders. It moves very swiftly internationally with a few, clicks of a button. So I think the Chinese government doesn't like that. The Chinese government doesn't like what they can't control. So attacking mining was perhaps a way to try to keep capital in China, which they're very focused on. The thing about Bitcoin is that Bitcoin solved the double spend problem. And the way I think about that is Bitcoin is not copyable. Every Bitcoin is unique. It's one of a kind. It'd be like if you had a rare, unique Babe Ruth baseball card, or 21 million Babe Ruth baseball cards that ever existed. You wouldn't say that because it's printed on paper is not valuable. It has value, right? Everybody would say, I'll pay you thousands of dollars, hundreds of thousands of dollars for that rare card. Bitcoin's kind of the same. It's a digital good that is unique, one of a kind, backed by code, backed by the computing network.
People say that Bitcoin's backed by nothing, and usually it's people my age. They have a real hard time understanding e-currency or Bitcoin. But Bitcoin is backed by something. It's backed by the blockchains. It's backed by the largest computer network on the planet. Unlike our money now, which has been taken off the gold standard back in the early 70s.
It is perfect money. It is pure monetary value. It has no intrinsic value because it doesn't need it. People found Bitcoin interesting as a collectible because it was pure money. So maybe its intrinsic value then, if you want to put it that way, I guess, is that it's pure money, right? I mean, it's 100% intrinsically money.
I mean, there are people to this day that still believe that you can take a dollar bill, go to the Federal Reserve and redeem it for gold. That's not the case, right? Like the dollar is literally backed by nothing but the full faith and credit, which is basically just saying you put your faith in the United States government because of its military and economic might that it can, settle its debts. That's really what the dollar is.
All value is subjective, and there is no intrinsic value to anything. There is only subjective value that human beings subscribe to it. And there is definitely value to Bitcoin because people find it useful, especially for transferring value all over the place, or as something to appear modern or more hip or something like that. There's all sorts of ways in which you can ascribe subjective value to something like Bitcoin, and it doesn't even have to be monetary. It could be, hey, I just think this is kind of cool.
So Bitcoin has value because the network primarily that's driving adoption and that is driving people entering into it believe it has value. And that subjective belief combined with all the objective factors that we've talked about the finite amount of them, the network, the decentralization, that has value. Those characteristics I think are critical. I think people say Bitcoin is for criminals. Again, because that's a popular narrative that has been driven purposefully by those who don't want to see Bitcoin succeed. There's no doubt that some people on the Bitcoin network use it for illicit purposes. There's also no doubt that the vast majority of illicit activity in the world is funded using the dollar.
Criminals definitely do use Bitcoin, ransomware, darknet markets, and so on. But criminals also use cash, right? Like, they use whatever. The big thing is that everyone is self-sovereign over their own coins, and you can't prevent market transactions from happening, no matter what the monetary regime is.
But I think overall, on balance, the vast majority of the network is not doing anything besides trying to store value, transact in Bitcoin in lawful ways. And I think that it doesn't make a whole lot of sense to use Bitcoin for illicit purposes because of the fact that it is an open ledger. It's not anonymous. It's actually very traceable. You can see where every single Bitcoin moves. And if you were a criminal and you were trying to commit a crime, why would you use Bitcoin to commit the crime when you could use the dollar and it is far more anonymous than the Bitcoin open source ledger?
So that whole FUD about criminals is crazy because the majority of transactions that happen in this world still happen with US dollars, still happen with the euro.
I don't think the U.S. government will ever ban Bitcoin because I don't think the U.S. government can ban Bitcoin. First of all, you got to realize Bitcoin is a worldwide phenomenon.
There's about, from last study I saw, 42 million people, I think, in the United States have Bitcoin. So as a politician, why would you go against that many of your constituents?
Bitcoin, as it's constituted, is merely computer code. It's merely communication being sent over the internet. If there's no criminal activity or nefarious activity, I don't think a ban would be constitutional. I think it would be protected by the freedom of speech.
A government cannot stop Bitcoin completely. You cannot kill the network. It's beyond that at this point. It's too big, it's too broad, and it would take a coordinated effort of 100 plus countries or whatever around the world to fight the Bitcoin network simultaneously, which is never going to happen.
In terms of people, we've got India and China who both have banned Bitcoin, and nothing happened. People still use Bitcoin in China. People still use Bitcoin in India. They also tried to stop it in Nigeria. Now they've turned around and now they're embracing it because their people use it. And they're talking about all the wonderful things that it's enabling the youth to do through their own merits, through their own efforts. Now that they have this tool of freedom, this real money, they're no longer tied down by whatever arbitrary restrictions and bureaucracy that the government wants for their system.
Eventually, I believe that the demand to use it, this consensus will form around Bitcoin as the best money, globally. And so people will start using it in such a broad sense that, every country in the world will be like, okay, we have to use Bitcoin or we're going to be completely behind.
You have actually seen the government in the United States, at least, embrace Bitcoin. Recently there was this issue over the infrastructure bill, and the infrastructure bill was imposing new reporting requirements on brokers of digital assets. And what we saw, which I think surprised many, is we saw at least 5 different senators, even more potentially, that came forward and said, we need to fix this to protect the innovation that's being found in Bitcoin and the larger crypto space. We think that this is the future. We think this creates jobs, and we want to change the bill so that language doesn't impose harsh restrictions and potentially have a chilling effect on this technology. That's the senators, like the people in charge of our government, some of our elected representatives. They fought to help Bitcoin. That completely runs counter to the narrative that the government's out to ban Bitcoin.
Risk and reward are two sides of the same coin. If you want reward, you need to take some risk. And if you want reward without risk, which is what central banks try to do all the time by de-risking assets.
There's so much volatility because it's a brand new asset that the world is coming in and out of, right? Coming into. But I think it's going to slow down as we get closer to hyper Bitcoinization, right? Because when you're not trading for dollars anymore, you can't really be volatile.
I don't think it stops anytime soon. That's the short answer. Over time, once Bitcoin becomes the dominant store of value and the dominant money in the world, I think then the volatility may tamper down. But volatility is healthy. Suppressing volatility is not.
Bitcoin is volatile, and a lot of people are concerned with the volatility, but that's the reason a lot of people buy Bitcoin, because it's volatile. You wouldn't be buying Bitcoin, or you wouldn't see the amount of people buying Bitcoin if it didn't rise like it's rising. And it can't rise without volatility. If it just sat still and never moved, well, people wouldn't be going, I got to get some Bitcoin. It's going crazy. They'd be maybe putting it in gold or something else.
One of the frequent things that I'll hear from somebody is, Bitcoin, it could crash 50% tomorrow. And sure, and that's absolutely true. If Bitcoin were to go down 50% tomorrow, none of us would think, wow, this is crazy. Why would Bitcoin do this? We would, those of us who've been around a while anyway, we would kind of know, yeah, that's what Bitcoin does sometimes. But that said, you look at the trend, it's clear. It's very clear. Bitcoin certainly is volatile, but it goes up. It's volatile to the upside.
If you want larger returns, then you're going to have to deal with more volatility. You don't get a steadily climbing asset, and like such an asset just doesn't exist. Like that's what people would like, because that would mean that they're getting richer without taking any of the risk. But that's part of the whole thing, is you need that volatility in order to get that return, basically.
Nobody could say that Bitcoin hasn't performed well. In fact, I think by most measurements, it's the best performing asset there is in the time that it's been that it's existed.
Once Bitcoin gets to a certain price point, as to whether that price point is $500,000 per Bitcoin or $1 million per Bitcoin, I don't know. But once it gets to a certain price point, the amount of movement that it'll have, like it does now, will cease to happen as often. There'll be movement, but not like there is now.
Bitcoin's not going to get to $500,000, $1 million a coin without being extremely volatile. That's just the way it is.
So I think in 10 years, Bitcoin will be used all around the world. I think it will have at least a couple billion users. I think it will mimic the adoption of the internet itself. It is a network that has network effects built on top of technology that has network effects.
I expect a lot more people to own Bitcoin. And I expect a lot more sort of like battles that Bitcoin will have gone through against governments or hedge funds.
I truthfully believe there are certain moments in history, the television, right? When you start learning the telephone, like those types of moments. The internet, right? Not even just the internet, but the World Wide Web, browsers. Like when you start looking at these transformative technologies, like as they continue to give us more and more democracy, like the internet democratized information, right? The telephone democratized communication. When you start seeing these things that start to change the way we live and empower us, more people will learn about it, and they will find out about it, and they will begin to understand, like, this is freedom for me. And when they get to that point, what's going to happen? They're going to take their value out of other things that don't give them freedom, and they're going to trade them for the harder, sounder money.
The long-term case for Bitcoin is really simple. There's only 21 million, or a fixed supply, and increasing demand. And the only release valve there is price. So I expect price to go up as a result.
Where do I see Bitcoin in 10 years? I see Bitcoin as more established, more people using it than maybe 10% of the world's population.
I think in 10 years, we enter into the equivalent of the mid-2000s when it comes to internet adoption, the advent of smartphones. There's some data that shows that the users currently on the Bitcoin network is sort of mid-1990s, late 1990s levels. And I think we're right at the tipping point where we have broad-based massive adoption in the next 5 years. I think in 10 years, you're going to see every major financial institution that take Bitcoin.
But Bitcoin in 10 years, in my opinion, is going to be the strongest commodity ever created on the planet.
In 10 years or so, we'll be well on our way toward that path. And I think 20, 30 years from now, I think Bitcoin will be the dominant global money.